In London, more than a dozen leaders from Europe and Canada, respectively, met with Zelensky for an emergency summit. The UK Prime Minister said the group is working on a peace deal to present to President Trump, and the group will boost military aid to Ukraine and look at building a coalition of peacekeeping troops.
With this, the fact that the mineral deal didn't go through on Friday, now the Europeans saying that they're talking about possibly being willing to go and fight and go actually commit combat brigades to the Ukraine and actually to the Dnepr, to the Donbass, going into battle with Russia's forces. Again, I don't particularly think that's going to happen, but at the same time, that could happen. So let's go and paint the picture. What does that look like from an economic standpoint if Europe does commit itself to this?
I think that will increase the geopolitical tension. The whole point of one of the things that President Trump campaigned on was to end the war. And if anything, last Friday was evident that there is a political party that kind of doesn't want that. So when you look at the big picture, we are the bigger spender in NATO. And when we stop spending, that's going to force the European nation to step up. Unfortunately, UK's economy is not doing that well. Same thing with Germany's economy. So they're somewhat limited of how much they could do and how much they could spend. I think the mineral deal was at the very least going to allow the US government to somewhat recuperate some of the spending and investment that we've done in Ukraine. And also, it's worthy to note that President Trump was in discussion with Putin. Specifically, the Western banks and the U.S. have actually frozen about $350 billion worth of Russian assets. That somehow, some way, that was actually going to come in the mix. So to take a step back, I think the bigger picture is that geopolitical tension is going to continue. And unfortunately, there are sides of the political spectrum that actually want and need that to continue.
And so when we're looking at that, we're talking about the spending, we're talking about the drawdown. The Western European nations, they're going to have to borrow if they do this. What effect is that going to have on these national currencies and the basket of national currencies that we see in the West?
Well, I mean, over the weekend, we got the numbers. Global debt as an all-time high and global debt to GDP. In other words, the global economy, we're seeing some of the slowdown. So, when you take a step back and you look at the sequence of events, when President Trump got elected, everyone knew that tariffs were going to occur. Then all of a sudden, we started seeing the migration and rush of gold out of the European countries into the U.S. Roughly 6,000 tons of gold moved from the Bank of England and the London bullion market to the U.S., specifically in New York. Then we obviously had the tariff announcement. Our U.S. Secretary of Treasury, Scott Bessent, mentioned that we want to be able to monetize the asset side of the balance sheets to help the Americans in general. So specifically, the U.S. government has gold, has land, and the idea floated around about to possibly reevaluate gold, because gold is at about $42.22 on the government's balance sheet versus the current market value roughly at about $2,900, almost 70 times difference. What that could allow is the government to have an ability to borrow new capital at a discount of the price. Now, it's not a surprise that the need or desire to audit Fort Knox came after the gold migration. So if you kind of take a step back and look at the big picture and say, we want transparency. When what DOGE has done is to basically expose about $140 billion of inefficient government spending. The goal is to bring it up to about $1 trillion by September of this year. The less we spend, the better our value of the dollar is going to get. However, when the European nations where they are indebted and they continue to spend, and when we see the migration of gold out of Europe into the US, it's a big question mark about what's going to happen to their value of currency.
So walk me through this then. When it comes to precious metals, what would that market do when we're seeing this drive towards perhaps even, and what I think is going to happen is actually, and I'll just drop back here from a geomilitary focus, is what you're going to see and what we're already seeing over the weekend is that Ukraine has launched offensives. We're also seeing Russia launch counteroffensives. Why? Because both sides are going to want to put themselves into the best possible position for these negotiations. And if it looks like the negotiations might be scuttled, then there's certainly going to be an impetus here in the near term for some perhaps very drastic escalation, because they're going to want to ratchet things up with the hopes that there will be some kind of deal. But each side is going to want to see how they can get themselves in the best possible position. So Ukraine is going to try to take even a bigger chunk out of Kursk region in Russia that they currently have a foothold in. Russia is going to try to pound more in the Donbass. And by the way, everybody keeps missing this point, but Russia always has that long strike capability that Ukraine doesn't really have. So Russia can begin raining down cruise missiles anywhere in what would be considered the backfield, what can be considered Western Ukraine. So you're going to see a number of potential escalations here over the near term. Now, that's all barring any potential negotiations or back channels that President Trump and Putin do have, where perhaps they already have a discussion on the board on that. But it wouldn't surprise me if we see escalation in the near term, is what I'm saying. And that's kind of our most dangerous scenario. So if you're seeing that, if you're seeing the Russians double down, if you're seeing the Ukrainians double down, Western European nations double down, what's going to happen with our precious metals market?
Word safe haven assets. You know, anytime that there are some geopolitical tension, there is a little bit more fear in the market. You see more and more move towards the stability of gold. And it's not a surprise. Over the weekend, we saw gold go up about $30. You know, if the agreements had been settled on Friday, that could have changed the outcome of gold. But gold is foretelling. The more problems we have, the more uncertainties we have, the more investors are seeking more of that stability and more of the safety nature. Right,
because when it comes down to it, we don't know what's going to happen. We also don't know how this Ukrainian mineral deal, so let's say that goes through, and that's, you know, this is perhaps the safety valve gets switched. Let's say Ukraine comes in, Zelensky goes in, hat in hand, says, okay, you know what, I'm done with this, but I want this mineral deal to go forward. So you're going to potentially see pressure on U.S. dollar there. You're going to see pressure from, because the Ukrainians, this is something that I found out when I was in Ukraine 3 years ago, by the way, that when you go into some of these areas that are getting closer to where the fighting is, and we made it to within about 15 kilometers from where the shells were falling in Mykolaiv a couple of years ago, that they're not even, they want U.S. dollars. They want those greenbacks. They want that on the ground. Why? Because it has more stability than the Ukrainian hryvnia and, of course, the Russian ruble. We've also seen a lot of flux there. It's been more stable than, of course, the Biden administration was trying to destroy it, but it's going up and down like crazy. So could that be another potential driver if the peace deal is signed and now this mineral deal gets going as well?
Yeah, absolutely. Look, at the end of the day, you want to look at the overall need and demand and supply of gold. Although Ukraine is rich in a lot of minerals, they're rich in uranium, they're rich in other types of metals. They're not as rich as gold, silver, or even platinum. Unlike Russia, Russia is a self-sustaining country. They have all the resources. And I think the bigger question people that are just not focusing on is China. You talked about the shells. You talked about all the weaponry that's been supplied to Ukraine. In the background, what we've noticed is that the global trade in the last 4 years, China has been the beneficiary. I know last time we talked about the BRICS nation and how China has built coalition and they see strength in numbers. One of the things that President Trump is doing as of late is not only the tariffs that he is imposing on Canada, Mexico, and China, but also the fact that Mexico, some of our closest allies, are thinking about imposing tariffs on the Chinese. So to go back to your question, absolutely, there will be a lot of dynamic. And this is the whole point of having some gold. It is a neutral asset. It is not dependent on one country's ability. But when the U.S. talks about gold, U.S. will move the market. And it's important for investors, retail investors, to start to position themselves just like institutional and central banks.